I think it means something is actually blown up already. And I think that's why the Treasury curve is so steeply inverted. And that's why the Eurodollar curve is so steeply inverted. I think something has been blowing up and I think they've been monetizing it. But obviously, you know, highly sophisticated players know about it. And that's why the curve is inverted.
Greetings to all metals and markets listeners out there. A little bit of a shakeup in our typical format this week. I'll explain in further details as to why after this brief intro. Both gold and silver prices had solid showings this week. The gold spot price climbed over $40 an ounce, and the gold spot price is closing around 1,340 fiat US dollars per troy ounce. The silver spot prices finished the week just over the psychologically important 15 fiat Federal Reserve notes mark per troy ounce. The gold-silver ratio is still threatening 90, closing this week at 89. In a few short moments, we'll be back with this week's guest, Mr. Dave Kranzler from Investment Research Dynamics. But first, a quick word from our show's sponsor. SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. Founded in March 2012 with the goal of providing the lowest cost bullion available, SD Bullion has become one of the largest US-based precious metal dealers and is regularly recognized by Inc. magazine as one of America's fastest growing companies. We are committed to being your trusted source for low cost, highest quality investment grade bullion products. Visit SDBullion.com for more information. Welcome back to this week's Metals and Markets podcast. I'm your host, James Anderson of SD Bullion. To start, we begin with some transparency. This week, for me personally, was running through the gauntlet of fully immigrating my immediate family and pets from the USA. And to be frank, it's a lot harder, expensive, and more complicated than Puff Expat Plant Multiple Flag newsletters might have you believe. The moment I arrived to my new homestead this morning, I called this week's guest, Mr. Dave Kranzler from Investment Research Dynamics, asking him to briefly give not only you an update on his latest thoughts, but also update myself as I was busy moving everything this week and unable to stay on top of financial market news and ongoings. I did see that Federal Reserve Chairman Jerome Powell was in financial news earlier on this past week, talking about how the Fed may soon begin cutting interest rates again. And that is where we will pick up on this casual discussion of financial markets ongoing with our returning guest, Mr. Dave Kranzler. Dave, what is going on in the stock market?
I think the plunge protection team and the Trump government, I think they're actively involved in trying to hold the markets up right now and keep a lid on the price of gold. And it's about as intensive as I've ever seen.
Yeah, so you're talking about direct intervention, propping up financial market values on one end, and then on the other end, direct intervention to keep the price of gold below the key $1,400 price level.
Yeah, and so to the stock market propped up, it doesn't. I don't think it really takes a lot of active intervention from the plunge protection team because of the way the hedge fund algos are set up. Like Jay Powell comes out and it was Monday. It was Monday that the stock market started to shit the bed. It was because of the trade war stuff that came out over the weekend, and the market was getting ready to shit the bed, and then Powell comes out and gives a speech about talking about the possibility of cutting interest rates.
Yeah, just about 6 months ago, Federal Reserve Chairman Jerome Powell was running around posing as a hawk who was about to keep raising rates and now here we are, a complete 180-degree turn.
Right. That was like, I don't know, maybe October. And then right after the Christmas Eve massacre, he comes out and says, "Oh, well, you know what? We might have to start. We're gonna stop raising interest rates, and we're probably gonna end QE in September."
Recently, gold is looking pretty strong. I would assume it's just because Jay Powell's running around running his mouth about cutting rates. You do that, gold's going to run like crazy, I'd assume.
I think that's part of it. There was actually, you ever read Jeffrey Snyder from Alhambra Investments or Alhambra, whatever they call it?
Yeah, Jeffrey Snyder, I definitely follow him. He's a smart guy.
Yeah, so Alhambra Partners, I think is what it's called. He wrote a great article that didn't really get posted around. Like usually Zero Hedge publishes his stuff, and I didn't see this one on Zero Hedge, but he wrote an article talking about the curve inversion in Eurodollar futures, and that's even more pointed than a Treasury curve inversion because the level of sophistication of the players that buy that put money into Eurodollar deposits. It's large corporate players and very wealthy individuals. It's basically the inside elite. And when the curve goes inverted, that's an even stronger statement about something happening behind the scenes in the financial system that's not widely acknowledged. And I suspect it has to do with Deutsche Bank, but I can't, no one can prove it until, the event actually happens and surfaces.
It's good that you explained a bit about the euro dollar market. I think people don't understand how important that is, and the fact that the inversion probably means major capital flows are moving, and we just don't understand yet generally as to why.
Right. And he talked about how it was very steeply inverted in mid to late 2007, right around the time that Bernanke came out and said, "Oh well, the subprime issues are contained." Obviously, they weren't contained, and the euro dollar futures, the inversion in the curve was pointing towards, I think it means something is actually blown up already. And I think that's why the treasury curve is so steeply inverted. And that's why the euro dollar curve is so steeply inverted. I think something has been blowing up and they've been monetizing it. But obviously, you know, highly sophisticated players know about it, and that's why the curve is inverted. It's like the ultimate flight to safety, right?
Yeah. I didn't even get the chance to look before we got on this call. What have you been writing about lately at Investment Research Dynamics?
Well, not coincidentally, and I think it's correlated with this. Last week there was a secret meeting with Steve Mnuchin convened with a group of the top U.S. financial regulators, which include the chairman of the Fed, Powell. It's the Financial Stability Oversight Council, and you're talking about the head of the Office of the Comptroller of the Currency, head of the FDIC, head of the SEC, et cetera. And they had a meeting that was triggered by an alert that an advisor to Mnuchin got from his buddies on Wall Street.
What was that last part? I
And
kind of cut out. What were they looking for?
well, the meeting concerned problems developing in the junk bond market.
Yeah. The junk bond market is just a matter of time before you have to change the gradings of some of those things, and that will be shit hitting the fan because some pension funds can't hold certain things when they get to a certain.
Well, when you think about it, they can print money and prop up the stock market, but if you have a large population of companies that have issued billions in junk bond debt and can't make the payments, you've got a problem. It's not as easy to monetize that as it is, monetizing the stock market. The stock market, they got hedge fund algos on their side.
Whereas if you have a bank or if you have serious loans that you are having trouble to pay and it becomes obvious and your rating needs to get dropped off or et cetera, it can cascade into a real problem. I get it.
Right. Well, and then the market sees that, and all of a sudden you have a flight of capital out of leveraged products, and that's what happened in 2008. There was derivative blowups, and the all connected to leveraged products, and the capital basically went into hiding. There's like cockroaches when you turn on the light in the kitchen; they scatter, and that's going to happen again. It's just a matter of time.
And the feeling that you're getting though with all this, I mean, looking at the markets and seeing these types of meetings going down, I mean, it just looks like something's happening.
You got this meeting going on. You had the conference call at Christmas time between Mnuchin and the heads of the big banks, the too big to fail banks. You had this meeting last week. You got the very steep inversion in the euro curve futures market. I mean, it tells you there's something likely is already blown up. And again, I think the source of the problem is Deutsche Bank. But it could be a lot of things.
Deutsche Bank is definitely one of the higher banks on the FSB's systematically important banks. Like if Deutsche Bank has so much derivatives and so many things on their books, like if they went down, they'll do whatever they can to save that. I would imagine it becomes apparent that they're bailing it out in some way or another.
The stock trades at $6. The stock market's telling you Deutsche Bank's equity is option value, and that's it. Option. It's an option that it's going to be either bailed out or go tits up. It's a $6 stock on a bank with the asset size that Deutsche Bank has is optionality value, and that's it, nothing more. And I can guarantee you that a combination of the German government, the Bundesbank, the ECB, the Bank of England, and the Fed are propping up Deutsche Bank and keeping it from collapsing. I would bet money on it. If the central banks pulled away, Deutsche Bank would blow up tomorrow.
So, David, what are you thinking in terms of timing wise? Do you think that the fall is going to be a little bit crazy? I mean, it feels like that way. I mean, it feels a little bit 2007-ish right now. Kind of we're starting to build a little bit of momentum towards something really going wrong, and there being an admission of there's being something very wrong.
Who knows? Timing's impossible to gauge. I mean, we kind of saw a series of events in 2008 that pointed in that direction, the blow up of Bear Stearns and the collapse of Lehman. But I mean, all the signs are there that there's going to be a big blow up. You've got the delinquency and default rate on credit card debt is now at those same levels where it was in 2009. Auto loan defaults and delinquencies are starting to rise. Same with mortgages. I mean, it's just a matter of time before you've got large chunks of debt that default that are going to be too large for them to sweep under the rug.
Yeah, and of course we haven't even talked about it, but you got China sitting over there. Lord knows what's going on with that economy in the long term with how much debt they have. So
China has a safety net in the form of all the physical gold they've accumulated.
It's true. What do you think in terms of their BS official line of how much gold they have? I think they claim like 1,800 tons.
Yeah, everyone knows it's bullshit.
I'm sure they could add a zero to it at any moment if they wanted to.
Easily. Well, I mean, I don't know if you've seen the work from Alistair McLeod, but he's done exhaustive research on it, and he thinks it's anywhere between 25,000 and 35,000 tons.
Yeah, his research on it has been pretty awesome.
Yeah, and it's not like they've accumulated all that gold in the last 10 or 15 years. He's got evidence that they've been, there's track marks in the snow that show that they've been accumulating gold, I think since like the late 80s or something. I forget where he traces it back to. It's been a while since I've read the article, but it's a phenomenal article. And I haven't seen anyone ever try to refute it because you can't.
Yeah, so the very idea that China has only 1,800 tons is ridiculous. And Russia, pretty transparently, has the highest gold to GDP ratio, and I believe highest gold to their currency ratio around the world. They're very, very strong in gold. So at any moment, you could have a situation where Russia and China start flipping on new exchanges and new ways to totally to make cross-border payments without any dollars, and even pricing some commodities without any dollars. So
they're moving in that direction pretty quickly.
Yeah, I think so too. I mean, the way that they talk, the way that Vladimir Putin speaks, and the stuff that he says. I mean, they've been talking like that for like 4 or 5 years. There's absolutely no way that they don't have some blockchain that they're going to pull off that's going to be the account settler between the two sovereigns.
Well, I think it's going to be that plus all of the trading partners along the Silk Road.
I saw Malaysia, I believe. Malaysia's pretty active of talking about wanting to have currencies tied to gold again.
Yes.
They are literally trading oil straight up with China, I think now. Whether or not they're using gold or just flat out renminbi or who knows, but it ain't going to be in dollars, I don't think.
No. No, there's definitely, it's not like you can turn this on a dime. That for decades the dollar was used for probably 90% of all global trade settlement, maybe 95%. I've seen the numbers, I've seen research on it, and it's probably around 65%. It's like turning the Titanic in the ocean. It's a big freight liner in the ocean. It takes time, and you got to do it gradually.
Yeah, I mean, with the introduction of the euro and the success of the euro, I guess in the last 20 years, they've taken some market share, but at some point, the East is going to have their own say in that, I imagine, and it's just a question
Absolutely.
of time. And there's absolutely no way they're not going to, in the next 10 to 20 years, have some massive say in currency.
Right, exactly.
It just doesn't make any sense. So in the longer term, I'm pretty excited about the way precious metals are looking right now. I mean, they are cheap, and silver is so cheap right now, it's just outrageous. And like when someone talks to me about silver, it's like I can't be more solemn when I tell them, like, dude, just put like 5 or 10% into silver and gold and just lock it away for 5 or 10 years and just shut up and you'll be fine. I think that it's like the easiest, most frankest way I can just tell people that you'll probably be okay at these price levels. 5 or 10 years from now, you'll probably be just fine.
No, I agree.
Yeah,
I agree.
It's just it's like so stupid how cheap they are versus everything else. That cannot last.
Well, it's easy. It's even easier for them to manipulate silver than it is gold, and so silver market's probably one of the most manipulated in the world.
Oh, it is. We have a gold silver ratio at almost. I think it maybe hit 90 sometime this week. That's a 26-year high, and it may hit 100 if we get some stupid situation where the dollar, gets stronger, and maybe gold gets a little stronger and silver just stays flat. Who knows? But 90 to 1 is a ridiculous gold silver ratio with the situation and the
absurd. It's 89.5 to 1 right now.
It makes absolutely no sense. We're not in like a deflationary hellhole right now. I can't even understand an argument where you'd say that, like, yeah, silver should be for 90 to 1 versus gold. It makes no sense.
Stupid.
Yeah, the stuff comes out of the ground at 9 parts to 1. And now we're pricing it at 91. It makes
it's stupid.
Anyone who's ever done any research on it and actually comes in with a clean brain and does the research on the data would come across. You might not know the parties or who's doing what, but if you just flat out look at the price data, it's like it's obvious that we have a market that's highly, what would we say, highly controlled or highly influenced by some influences that literally just beat it down for profit every 6 weeks or so.
Right.
It's like, the governments are going to look the other way because they don't care. It's like we need our currency to look, strong and seem strong. So go ahead out there, commercial banks. You guys have your traders make a whole boatload of money while you rape the commodity prices lower. I mean, it makes sense. The motive.
Right.
Well, Dave, I appreciate you hanging in there for this phone call amidst all my moving chaos. I wanted to give you the chance to let the listeners know how they can find you and what you're doing over there at investmentresearchdynamics.com.
Yeah, so I manage a small investment fund, and I also publish 2 investment newsletters, the Short Sellers Journal and the Mining Stock Journal. And the Short Sellers Journal is weekly, and the Mining Stock Journal's bi-weekly. I think the titles are kind of self-explanatory. And I also have a website, investmentresearchdynamics.com. That's essentially I do blog posts, and there's links to to more information about my subscription newsletters on the blog or on the website.
Cool. Well, David, I do appreciate you taking the time. Every time I talk to you, I always have fun, and I really do appreciate you coming on the podcast this week.
Likewise. Believe me, the pleasure's all on this side of the internet.